This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association, your daily recap of the information that affects Iowa's farmers, producers, and consumers, right here in the heart of the heartland. With reports from our award-winning broadcast team of Dustin Hoffman, Riley Smith, and Mark Magnuson. Now, from the IARN studios in Des Moines, here's Dustin Hoffman.
Well, good day, everyone, and welcome to Ag Matters PM from the Iowa Agribusiness Radio Network. I'm Dustin Hoffman. Today is Tuesday, January the 16th, 2024. We're so glad you could join us here today as we unveil a different format a little bit here for Ag Matters PM. We are going to be doing away with the Ag Weather Outlook, and of course, always stay tuned to your local Iowa Agribusiness Radio Network affiliates for the latest in weather information. And we're also going to change that second news segment. We will still have highlights from video entities as we get them, and that will also help us lead into where you can find entire conversations and interviews on our Iowa Agribusiness Radio Network channels. But we're also going to use it as a chance to highlight some of the top stories being followed in the ag industry. But of course, one thing that hasn't changed, that is the market analysis and the market recap. And let's kick things off with talking to the folks at agmarket.net.
It's time now for the Ag Matters PM Closing Market Summary, your source for market analysis and settlement prices from the day's trade in Chicago, courtesy of the folks at agmarket.net.
Well, we're at the end of the trading day in a holiday-shortened week once again, and we turn to Robin Schmahl of agmarket.net here on this Tuesday. And Robin, kicking things off, how did the grains perform?
Well, the corn price, corn market, that struggled all day in negative territory, and that just carried through from the WASDE report on Friday. It's got to take a lot more to really jumpstart that now. I mean, seasonally, historically, we maybe should see a bottom in here, but you can't hang your hat on that because with the carry out, raising production, raising carry out, that did not do that very much good. Now, soybeans were higher overnight, kind of struggled for a while during the day, came back a little bit into positive territory. Really not a whole lot there either. Wheat took more of a beating, falling back during the day. Now, you can't take much off of the export inspections, but it's just something to keep in mind and keep adding up as we move through the year. Corn was 34.5 million bushels, down 8.5 million from the previous week. Soybeans, 46.5 million bushels. That was up 8.2 million bushels from the previous week. So maybe it could have had somewhat of an impact on that market, but I think much of that was set already on the overnight. Wheat was 18.4 million bushels, down 9.8 million bushels. Not a good situation for wheat because really in the wheat standpoint, we got a number of different things there. Wheat stocks at the highest since 2020, basically sluggish global demand, and our U.S. prices are higher than world prices, so we have more of a competition there. And Russia keeps on shipping out quite a few or quite a lot of wheat. So, and they're looking at probably a fairly significant production projected for coming on this year. So that's a negative situation as far as the wheat is concerned. Now, when we look at soybeans, South America, a crop consultant, Cordoniers, who was pretty prominent, he cut the Brazilian crop forecast to 149 million metric ton, down 2 million metric ton from the previous estimate that he had due to lower than expected yields coming in from most areas of earlier harvested soybeans. But on the other standpoint, he increased the soybean estimate for Argentina by 2 million metric tons. So that's basically a wash. But probably Ag Rural, they're another group there. They cut their soybean forecast to 150.1 million metric ton. That's down 9 million metric ton from their previous estimate. So will that make any difference? Not really. It's not going to trigger, traders getting excited about it. They're still too early. I mean, if we've seen the yields we had off of our dry weather this past year, and how we've ended up, we could see the same thing with South America, and they're looking at a big crop anyway, so it really doesn't make a whole lot of difference. China's first quarter imports of soybeans, they're slowing to a 4-year low due to lower hog herd and bringing that in for crushing. So they're really scaling back. Now, half of that's expected to come from South America, half from the U.S. Again, it's not a lot to really get excited about. There were some corn sales on the overnight of 126,700 metric tons to Mexico. That's become more kind of usual business. So nothing there. So it wasn't a great start to the holiday shortened week. And, the outlook based on today's trade, just not too much excitement, coming down here in the near term anyway.
So then kicking things over to the livestock side of things, we didn't have any overnight action, so we were coming in blind here this morning. What did we see on those cattle and hog trades?
Well, traders turned willing buyers today. They were a little negative on Friday, closed a little lower, but they were willing buyers today after the weekend. Futures are trending higher, not gangbusters, but slowly trending higher. We're looking at the price charts. February contract moved back to the highest level it's been since November 30th. So that's really, a positive situation. It's kind of like a slow trend. So it's not creating a lot of fanfare. Some asking prices started developing today in the South at 174, which is $1 higher than where it traded. Last week, we traded $1 lower generally on the cash. Now we've got some asking at 174. I think they might be looking at trying to eke some more out of those packers, because we are seeing some stronger box beef prices, which is giving impression that consumer demand is turning a little bit better. So even on the midday box beef today, we saw choice up $2.73. And then select was up a whopping $6.92. So we're seeing some real strength starting to develop in that really from the beginning of the year on box beef. So that would indicate that we're seeing some better consumer demand. Some of the increase in the box beef might be because of slower movement, because of the weather, retailers wanting to get the stuff in. We've had slower slaughter, so that all kind of works together on there. But it is showing that, we've got some good consumer demand down here. Now, on the hog side, hogs, after 6 consecutive days of moving higher, last Thursday, they topped out and just could not push through price resistance, and they fell back. Now, it just ran out of steam, and it gives the impression that it moved too high, too fast, without a whole lot of fundamentals really support underneath. There was just talk about fundamental support, but not actual fundamental support. Traders got a little more excited, and they bought into the trend. Now, the National Direct morning report showed cash was up $1.10. Packers are probably looking to get some hogs, try to fulfill their slaughter schedules, which have been disrupted quite a bit lately. So they might be a little more aggressive trying to get those hogs and try to pry it out of the farmer's hands. But on the other side, cutouts were down $1 at the noon report, so that kind of offset each other. But nevertheless, I think we're going to see a little bit more of retracement in the hogs. Fundamentals didn't support the 6 consecutive days and the movement higher. Now it's got to find some equilibrium in there where, buyers and sellers and the market fundamentals will feel comfortable.
All right, Robin. So if folks want to talk a little bit more about the market plans and strategies they need going into this year, what's the best way for them to get in touch with agmarket.net?
They can call me directly at 877-256-3253 or go to the website. There's a toll-free number there, 844 Ag Market, and you can call in. Somebody will answer the phone.
All right, Robin. We thank you so much for the insight. Look forward to talking to you again next week.
All right. Thank you. It's always a pleasure.
That again was Robin Schmahl of agmarket.net. Let's go ahead and take a look at the closing numbers. Those come to us courtesy of the Iowa Agribusiness Radio Network market screen.
March corn was down 3.5 at $4.43 1/2. Soybeans up 3 cents at $12.27 1/4. Soy meal was up $9 at $371.10 per ton. Soy oil $1 lower. They are at $47.25. Chicago wheat down 14 cents at $5.82 even. Kansas wheat down 13 3/4. That was at $6.01 1/2. Spring wheat out of Minneapolis 8 3/4 cents lower at $6.90 3/4. Oats down 16 1/4 at $3.52 1/2. On the Merck February live cattle up $1.75 at $173.12. Feeders were up $1.12 at $228.82. Lean hogs down $1.12. They were at $70.77. Pork cutouts were $1.15 lower at $84.70. Class 3 milk down 16 cents at $15.74.
And that's been the Ag Market Recap. We're going to take a short break and hear from our sponsor, the Iowa Soybean Association and the Soy Checkoff. When we come back, we'll run down some of the headlines. This is Ag Matters PM.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
Welcome back to AMPM from the Iowa Agribusiness Radio Network. I'm Dustin Huffman. Let's run down some of the ag news headlines. As concerns about antimicrobial resistance grow, large investor groups are putting increased pressure on major food service organizations to reduce antimicrobial use in their protein supply chains. In response, food companies are making antibiotic stewardship pledges and looking to protein suppliers to help achieve those commitments. One way they are doing that is through gene editing. It's one example of new technology being used in food and agriculture and making headlines because of its success in human healthcare applications. The technology is showing tremendous promise to help treat and prevent human diseases such as HIV, sickle cell anemia, and a variety of cancers, according to the World Health Organization. For more than 30 years, pork producers have been fighting diseases like porcine respiratory and reproduction syndrome, or PRRS, which negatively impacts pig health and welfare and creates pork sustainability and supply challenges. The PRRS virus also leaves the pigs open to other viral infections that need to be treated by other antibiotics. Now, a recent study from Isidore Machado, a graduate research student at the Iowa State University College of Veterinary Medicine, led to the ISU to quantify how much PRRS outbreaks are increasing the antimicrobial use. And the study found that injectables and water-soluble antimicrobials have increased 379% in nursery pigs and smaller hogs, and up 274% in older hogs that are closer to market weight. Now, that is a significant increase, but it is a bigger problem when you talk about the smaller, undeveloped hogs, or I should say the younger piglets, because they haven't developed that immune system. Now, PIC developed a solution to protect the pigs from the PRRS virus. Using gene editing, they've been able to isolate the protein that's susceptible in the hogs to the PRRS virus, and therefore have been able to take it out. Now, of course, that does then pass its way down to the offspring of the genetically engineered hogs. Now, PIC is working for the approval with very many countries that are in pork production, including the United States, Canada, Mexico, China, Japan, and Brazil. They have already gotten some positive feedback from the country of Colombia, but of course there are different regulatory issues and difficult regulatory processes to get these obviously passed, including going through the Food and Drug Administration and many more related companies in the other countries. You can find more information online about these PRRS-resistant pigs at picprsresistantpig.com. In other news, in a letter to the Biden administration today, the Renewable Fuels Association laid out recommendations for ensuring the best available science and data are used in determining the eligibility for sustainable aviation fuel under the tax credits established under the Inflation Reduction Act. The Treasury Department released guidance in December regarding the implementation of the credit, and the administration committed to releasing an updated version of the GREET model by March 1st for use in estimating the life cycle of greenhouse gas emissions in sustainable aviation fuel. The letter was sent to an interagency working group, or an IWG, that includes USDA, EPA, the Department of Energy, and the Federal Aviation Administration. It contained detailed comments and recommendations, including the analysis of strengths and weaknesses of different modeling tools, methodologies, and data sets being considered by the group for inclusion in the soon-to-be updated 40B GREET model. The letter also encouraged the group to ensure the new model is informed by actual observations and empirical data from the post-2005 period of biofuel expansion. The updated modeling framework should also take practical approach to integration and climate-smart agricultural practices, according to the RFA letter. And finally, the Iowa Organic Association is kicking off a new series of free webinars to help empower farmers and producers with knowledge to succeed in their organic journey. Whether you're new to the endeavor or transitioning or have years of experience, they're inviting you to join these conversations. The next one is coming up tomorrow at noon. It's the Transition to Organic Partnership Program and its objective resources. And if you are curious to find out what goes on in the top program, as we mentioned, you can connect with experts and those with knowledge and experience in making that transition. There's plenty of chance available to ask and interact with the people on the call and find out more what it's going to take to get in there. You can find out more and sign up by going to the Iowa Organic Association website at iowaorganic.org. And that's been a look at some of the ag headlines here on Ag Matters PM. You can find all our content online at iowaagnet.com. Don't forget to follow us on Facebook, Twitter, X, as we want to call it, LinkedIn, and our YouTube channel, which is where you'll still find AMPM episodes and more video projects. You can also get our free market podcast through Apple, Amazon, Spotify, Google, and Podbean. And you can also find the Iowa Ag Matters program up on our website as well at iowaagnet.com. From the iARN studios in Des Moines, I'm Dustin Huffman. For Riley Smith, Mark Magnuson, and Andy Peterson, we thank you for watching. This has been Ag Matters PM.